Okay, problem 7. Now, for Let's Travel Service, we're going to prepare a statement of cash flows. This is an important statement, but it's also tricky. It's not easy to do. So we're going to take our cash and we're going to divide it up between cash from operating activities. So it's operating and then investing. Oh, gee whiz. And operating, investing, and financing. Okay? And when you think about the balance sheet, we're looking at, if we look at, let's see, if this is current assets and this is current liabilities, the transactions that affect these accounts are operating activities. Okay, like accounts receivable, accounts payable, inventory, supplies, maybe an accrued liability. All right, those are operating activities. Transactions that affect our long-term assets like land, buildings, equipment. Let's put some equipment down here and maybe a building or some long-term investments. These are investing activities. Okay, and then ones that affect long-term debt and equity, these are financing. So if an owner puts more money into a business, okay, that's a financing cash flow. And we're just looking at cash here. All right, so I gotta just, this looks terrible. So let's say this is financing here. Okay, so what do they tell us? They tell us that we received cash from customers, $734,000. So cash received from customers is 734,000. Okay? Then we received cash from an additional investment by the owner. Okay, so that would be a financing activity. So we're going to say cash received from owner. Or why don't we say investment? Investment? No. Oops, look what I did. I can't read any of this. I'm going to move this. This is down wrong anyway, huh? This should have been investing. And then down in the bottom, financing. So we can say investment by owner. By owner. Okay, the investment by the owner was 36,000. Okay, then cash payments, cash paid for operating expenses. So cash received from customers, cash paid for operating expenses. And remember, we're just looking at cash here, okay? And so that's 745,600. Okay, and cash paid for land, that would be a long-term asset here. Land would be down here. That's not an operating account, that's like an investing account. So cash paid for land. And if we were in class, I would ask you, is this a cash inflow or a cash outflow? And we paid the cash, so cash is going out, 50,000. Okay, and cash paid to the owner for personal use would be, let's just say owner's withdrawal. So the owner put 36,000 in with, whoops. Oh boy, sorry. Owner's withdrawal. and the withdrawal is $20,000. Okay, so now we can net some of these. We took care of all, and we did cash from customers and additional investment, cash paid for operating expenses, for land, and then for personal use. We've got a beginning cash balance too of $89,000. So cash from operating activities was $734,000 minus $745,600. So they lost, they lost $11,600. And that's 11. This is cash outflow from operating activities, 11,006. We already have one there, huh? Get rid of this looking thing here. And then cash paid for investing activities, I've got 50,000. And net financing activities, we've got cash received from financing activities would be 36 minus the 20 would be a net of $16,000. Okay, so if I add these up, I'm going to say net, it's going to be a cash outflow. Cash outflows, we've got 11.6 is this, 11.6 is a cash outflow, isn't it? Okay, so we've got 16,000 minus 50,000 minus 11,600, a net cash outflow of 45,600. And then we'd say plus beginning balance of cash, and our beginning balance was 89,000. Gives us 43,400. Ending balance of cash. Okay. Okay, so our ending cash balance then is 43,400, and if you look at the balance sheet, the cash is actually 45,400, so it's $2,000 off, but it's not us. It's got to be the problem. I know it is. So that's the way it goes. Okay, so this would be a statement of cash flows, and what you want to remember is that we've got operating, investing, and financing activities, and think about these accounts on the balance sheet. Changes in current assets and current liabilities generally are operating activities. Okay, investing activities is long-term assets. Financing activities is long-term notes, like notes payable, and any capital changes. Okay, all right.